Welcome to this week's Cattle Call on the Rural Radio Network. I'm Susan Littlefield. We definitely are seeing a big struggle in this cattle market. We knew it was going to happen, but to this extreme. But there is a silver lining to all of this, and we'll find out some good news from everything as well. As Brad Kooima joins us on this week's Cattle Call. He's with Kooima Varilek out of Sioux Center, Iowa. And let's start out with the fact that we saw the numbers take a big drop on a Tuesday, continue into a Wednesday trade as you and I are talking. So day 3 of the meltdown, and unfortunately it continued.
Yes, for sure. Yeah, it's a family show, right, Susan?
Yep.
Thanks for having me on, of course. Yeah, it's a lot more fun to talk like we've frankly done for most of our Wednesdays right here for the last long time about how, another big up day and another solid week and another good day of cash and all the rest. But you're right. I mean, any market is a market of action and reaction. Thankfully, no market goes down every day, nor do they go up every day. But, I get a lot of, well, why Brad, and questions, and that's legitimate. Supposedly this is what I do for a living. And I guess I tell people, well, I don't know, of course. If you think I do, then you're mistaken. But, let's be a little bit realistic here. Take a step back from the market. We went to 185. Okay. That was $10 higher than we'd ever had cash cattle before. $10. That's a lot. Okay. You usually pay a bit of a price for those extremes. Market goes too low. Futures market, sometimes it goes maybe what you might say too high, although I don't really mean that. I don't think anything is too high, right? But so you're going to get a bigger reaction to coming off of these kind of price levels. So there's a couple of components, I think, to the thing, Susan. One is fundamental. We're trying to understand, about cash cattle fundamentals, maybe as they relate to futures and basis. And then there's the technical part, and maybe that's where we ought to start. We got the market very overbought. The funds have been a huge participant, huge player, a huge reason why we've rallied, because they bought a bunch of stuff here on the way up. You got to love the funds when they're on your side, right? Now, as of yesterday, though, yesterday's close put the funds, at least the quick turning funds, in a position where this was their signal to, oh no, let's get out. And so that was a sell signal for them. You saw it in the open interest. The open interest went down almost 5,000 contracts in the Junes alone yesterday. That's liquidation. That's mostly likely was a lot of the funds. And that follow through selling happened here again today. So, unfortunately, the funds didn't get in a day, nor can they get out in a day. So we probably got that technical worry, I think, hanging over our head yet, for sure.
So how much leading up to Wednesday was the Feds kind of hanging on over this market? I mean, I knew from a grain perspective, it was talked about a lot, but what from the livestock side?
For sure. The macros, for lack of a better description, right? I mean, the concern over, have we ran over we got to the tail of the inflation dog, right? I mean, are we through that? You look at crude oil, what it did this week, which is sharply lower if you don't know. Big stock market break yesterday. Cattle. I always say it's like SeaWorld. Cattle are in the front 2 rows. If there's uncertain news, it seems like the cattle are the beneficiary of going lower because of that. That's just the nature of cattle. So that was certainly, I thought that the beginning of the week, between the concern about that, the macro stuff, the economy, the stock market, and then when the South was so quick to take lower money on cash, I think that just kind of took the wind out of the bull sail here, and that's what I thought contributed to a lot of the selling this week. The weakness in the cash in the South, particularly, and then the rest of the stuff that we talked about.
So, how are the cattle looking in the South compared to those cattle in the North?
There was a while there where we had almost a record spread. That spread has narrowed some. So today, 171 was largely the trade in the South. A little hard to pick the trade in the North. There was some 280. There was a little bit of 177. So that spread has narrowed a little. The high week, that week that, we were high fiving and backslapping that week. I sold 185. The South was 175 that week. So the spread has narrowed a little bit. Don't forget now, futures will go to the lowest denominator. In other words, the futures will try to line itself up with where the worst cash is, not the best cash, because of the threat of delivery, of course. So, you're looking at June still $10 discount, 161.65 tonight's close, and a 171 cash. And unfortunately, I've seen that before. The analog year for me is 2017. We had a very similar wide basis April 1, started to narrow it by May 1. By the end of June, we had converged, and we had converged largely because cash went down to meet futures. I hope I'm wrong this time. I'm hoping it's a little of both. Futures coming up to meet cash. I'm just reporting the news. I'm not, trying to make it here. I think that the trade will still be surprised at how the lack of supply in the north will still turn their head. That's why we rallied the last time. Let's see if we can fool them once more.
What about the concerns? I mean, we're hearing a lot of chatter coming out of the panhandle of Nebraska, the Sandhills area that, man, if we don't get rain, we don't have pasture. And the fact that we're into May and there's a lot of pasture concerns already, should that make the cattle market nervous?
Yes, unfortunately. And I am really sad for those guys. I'm sad that we're still talking about this. I was hoping that, we would have flipped here with the changing the La Nina versus El Nino. It seemed to, the promises were made all winter long, spring long. And even this next short-term forecast here that, we all kind of wrapped our head around that, hey, two big systems, two general rains for the whole western side of the Corn Belt here. Doesn't seem like that's necessarily a given either, as that forecast deteriorates a little bit closer to it. It's hard to imagine we can liquidate this herd any further unless you're living in it. And I know they are in parts of Nebraska. Parts of Kansas had some relief in Kansas and Oklahoma last week. But, one rain doesn't make it happen either, of course. So, it's potentially, another round of cow liquidation, right? Another round of having to place every heifer on feed. I wonder what this is going to mean. Sometime we could do an hour on this. Because there's areas of the cow calf country, Susan, that are good. I mean, the Dakotas, most of Montana, Colorado, Wyoming, they're going to retain heifers. I don't think there's any question, So the difference between then and 2013, when we went from that 12 drought, and then it's like everybody got rain and we all, they all rebuilt at the same time. That's why 2014 was the big move. It was maybe from a market standpoint, maybe this stretches out and modifies a little bit, but makes it better longer term because it's going to take longer for every segment, to experience that expansion phase again. I don't know. I certainly feel bad for the people that are in the middle of it. It's generations of work that are being lost. It's a bad deal.
And last but not least, we are a week and a half away from the most important grilling day of the year, and one that's extremely popular. So let's get some good red meat proteins moving across that meat counter.
People have asked, different times, what about demand, and I say it's fine. In fact, if you don't think it's good right now, then it's never good. This is our best demand time of the whole year for sure, Susan. Get out there and get mom a New York strip, right? I mean, they sell more New York strips that weekend than any other weekend, that? So that's what they tell me anyway. So we got a great product. Last week's overseas, 11% of what we slaughtered last week went to overseas. That's a big number for beef. So it's not a demand problem. It's just we got to, again, roll our head around here a little bit and stop some of this panic selling on the cash cattle. And I think I don't think this is a 2015 like situation at all. We needed to correct. We're going to correct some, and then I think we'll stabilize here by the time we get to the end of the month.
All right, sounds good. Thanks for joining us this week, Brad.
Thanks for having me.
Brad Kooima joining us this week's Cattle Call, and as always, we remind you commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call right here on the Rural Radio Network.